Well, Mvelaserve is an outsource services company offering a diverse range of business support, including security, facilities management, catering, freight management, warehousing, water purification, ICT support and hosting and infrastructure repairs. Mvelaserve is headquartered in Centurion and has a market cap of 1.6 billion rand and a price to earnings ratio of 31. Well, this one is a well-diversified services player, isn't it?
The one you forgot was King Pie in Kuseti. They actually own King Pie, the franchisor of it. I mean, there's so many spinning parts to Mvelaserve. So often the best way to approach these companies is actually look at which ones are the biggest, and almost ignore the rest as noise. And if you can start to see the drivers of which segments are the largest, you can more than likely start to call these companies. And in Mvelaserve's case, it's actually Proteocoin, Total Facilities Management.
Telecom's their biggest client in that space.
Absolutely. There's Kuseti, which, as I said, was King Power, and there's Stanford Sales. The one I particularly like, which is small but growing the fastest, is Zonke. It's a limited payout business.
And that's obviously got to do with almost a gambling scenario, hasn't it?
It is. And it's very simple. You get, it's basically your one-armed bandits. They're rolling out the one-armed bandits, and the more machines are out there, the more people will gamble, and the more people will gamble, the more they make. And it's just that simple.
Craig, do you like the Mvelaserve story? Of course, there we are highlighting the key elements within the group.
Well, I think I share Keith's view about Zonke. It's because I've got a remote around it. There's nobody else. The National Gaming Board is really driving that part of the business, and as long as they've got the tender, they're making really good margins. I think it's about 38%. But what concerns me is a lot of the other divisions, the margins have been squeezed, coming from, I think on Protea, it was about 7 or 8% going down to about 4% over the last 3 years. So, there's been a squeeze even in King Pie and these various other divisions. And the food caterings, they've actually been making losses. So if you think about it, the company's on a very good rating. It's on a dividend yield of 3.2, a PE of 7.6. But one has to question, well, why is the market rating it at, is it value? Or when you look at the declining earnings and obviously struggling, my question is management really fulfilling their duties in all of these divisions? I think you're seeing pockets of outperformance like Zonke, but that to me is more being able to have the right contract.
And we seem to be fixated on Zonke. I mean, that's that's the smallest part. If you were to break up the Mvelaserve group, I don't think Zonke would actually come to fruition early on in the discussion. It's really a tiny part of the group.
In fact, they didn't even list with it, my understanding. But I have to agree with Craig.
But just margins are under pressure.
Absolutely, I have to agree with Craig. And the basic premise of Mvelaserve is to have a whole lot of these business support functions, but a lot of them actually have very little competitive advantage. What is your competitive advantage with a cleaning business? What is your competitive advantage with a catering business?
All you can do is continue to cut cost if other additional competitors come in.
Absolutely. On a catering business, you're competing versus every soccer mom who's got a bit of time, basically. So a lot of these businesses will always be under margin pressure.
Is the business model under threat?
I wouldn't go that far. They do have deep pockets and a fairly strong balance sheet. I mean, the Mvela brand itself has equity, which lends this business the ability to tender into businesses. It's basically trust if you're coming to their premises. And there are other parts. Like Proteocoin, the margins will always be under pressure, but
they've gone from 8 to 4%.
Absolutely.
And they've halved the margins, as Craig was saying.
And it's a very capex hungry business, is Proteocoin. But there's certain things like firearm licenses, they've got back offices where, and those are actually competitive advantages. The rest of the business, there's pockets of good businesses, pockets of bad businesses, and that's why it comes out as quite a mixed bunch.
Craig, hot or not on Mvelaserve?
Well, if I can just add, the most recent acquisition is a pothole repair business, and with the shortage of bitumen, which happened shortly after the acquiring it, I can only think of what the returns are going to be like there too. So to me, not exciting. I've got no confidence in management. It's on an NAV of about, I think, 1.9. So to me, it looks expensive. Even though the PE is good, it's more of an asset play and it doesn't work for me.
Keith, hot or not on Mvelaserve?
Well, you've got short-term profit pressure. You've, like I said, in the long term, you've actually got some businesses that I don't see any competitive advantage at all. And then you've got a company that's trading on the elevated price earnings. Yeah, there's a bit of dividends, but more importantly, its price to book is 1.8 that I can't justify at this point. So whereas I like the concept, I don't see any synergies between the business, and at this point, I have to go against it.